Welcome back, everybody. Sive is here with the Forex Peace Army.com. Let's keep up with the analysis of the gold market. So, based on the recent performance, we can't say that we were wrong. So we said that market is preparing to challenge the top. But at the same time, with the way how market performs, it suggests that the pullback might happen in nearest time. Why? Because with the recent action, market was very close to the top and easily could try to challenge it, but somehow it didn't do this. So it's stopped here, completing some intraday target and turns down. It makes me think that in the nearest time we could get some pullback here before next way up might be formed. In general, by the fundamental picture and the general news picture, it is reasonable because in the weekend it will be meeting with the United States and Russia. Some turmoil stands in political stage in the European Union, so everywhere some problems. And investors in such circumstances, especially when we are going to the Christmas holidays, they do not want to risk too much and hold positions for the weekends and prefer to just minimize the potential risk. From that standpoint of view, I'm not excluding the situation where we could get some bounce. But at the same time, recall a very important thing, that this most recent upward action, in fact, if you'll take a look at the weekly chart, this is weekly bullish grabber. And it remains valid until market stands above 41, approximately 65, 41, 70 lows. So market could show any retracement inside of this swing, even retest this trend line, and it will not be the problem. And the bullish scenario still will be on the table, but market could return it back up and taken out of the stop, because the target of this grabber is particularly this top, because all other tops already have been taken out. So it means that overall context remains bullish on the gold. So on the 4 time frame chart, you could see how everything has happened recently. So you can see none of our grabbers that have been formed here has worked. We said don't pay attention too much to these patterns. This might be just a byproduct. And indeed, if you take a look at the bearish grabber that has been formed here market hasn't taken out of these lows, so it hasn't worked properly. Bullish grabber here has been erased to this downside action, this action. Although the breakout that we suggested has happened. So we've got this strong upward action, but it's very specific manner. So it was really fast and short term. So market just grabbed stops above this area and collapsed. This is another reason why I think that here in the current circumstances a bit deeper retracement might happen. This grabber doesn't mean too much because actually it has the minimum target right there. So market just should show a bit deeper downside action with this performance, but it doesn't mean that market will stop here. This is just minimum target. So let's see. In the current circumstances today and in the way how market performs, personally I wouldn't consider taking new longs by far and prefer to see what will happen. This always happens with these big days when there be lots of data releases, central banks meeting in as well. So as you can see, while we were in general correct and the breakout has happened, it was a lot of tricks and actually pitfalls was on the way to the target. So this volatility here before decision, on a decision, spike was too fast. So as you can see, it was really the challenge to trade with it. And that's what I'm talking about every time when we discuss some trading stops in a day where later should be some important event. So on the hourly chart, here's actually what we have. The butterfly that we discussed has reached the first destination point, almost has reached, not quite, but it was close, 75, and it was target 79, so just $5. It's not quite reached this area, and dropped. Here we have another minor grabber that also just taken out of this lows, as well as in the 4 time frame chart. It makes me consider a kind of the, well, I wouldn't call it as a kind of hand shoulders, but something like this we could get. And for the first point where we could think about, or at least we could keep an eye on it, searching and looking whether it will be something, is 43 as a first confluence support area. If it will be broken and we will get still deeper retracement, I don't know, maybe in this case it might be treated something like double top or something like this. With this deeper retracement, yes, we will be watching for lower standing levels. But, well, based on the current performance, maybe we could even try to draw this line. Let's actually see what might happen here. So potentially, yes, market could even retest this triangle that we have on the daily chart, and this has been broken. Let's see with the lower standing levels, but I hope that it will not go too far with this retracement so deep. It's just some kind of the ultimate scenario, tail scenario. For a base case, I suppose that it might be around 43. It will be nice, maybe slightly lower, but with this performance that we have on the daily chart, I prefer to get it not as deep. So this minor trend line also point to the area around something like 42 maybe, and we actually maybe we'll see it there. But as I said, I prefer this market to stay inside of this triangle that we stand here. Anyway, currently as a bottom line, I suggest to not consider any new long positions based on the recent performance. So here we have some local tactical weakness in the market, and prefer to see for a bit deep retracement. The first level that we will start watching next week will be 43.